In the past 24 hours, the market's pulse has been shaped by shifting flows and policy momentum. The most striking signal, nearly $796 million of outflows from spot Ether ETFs over 5 days, accompanying a roughly 10% drop in ETH, suggest waning retail conviction in Ethereum right now. Meanwhile, Solana is gaining traction. Multiple asset managers filed revised ETF applications with staking features, sending institutional flows and renewed optimism into Sol's trajectory. On the macro side, Federal Reserve commentary hinting at eventual rate cuts has stoked renewed risk-on appetite, though concerns about a U.S. Bitcoin strategic reserve continue to unsettle sections of institutional interest. Behind the price action, infrastructure and regulation shifts are aligning to reconfigure institutional access. In the U.S., the SEC has streamlined ETF approval timelines from as long as 270 days to about 75 days, a move expected to unlock a pipeline of new crypto ETFs, including for altcoins, in coming weeks. Moreover, a joint SEC-CFTC staff statement clarified that registered exchanges may facilitate spot crypto trading, enhancing legitimacy for hybrid venues. At the legislative level, the Genius Act now enshrines clearer rules for payment stablecoins, and debates around the clarity and market structure bills signal a rebalancing of regulatory oversight between the SEC and the CFTC. Meanwhile, banking regulators are loosening prior constraints. National banks can now engage in certain crypto activities, such as custody and stablecoin settlement, without prior permission. These regulatory and institutional moves are driving deeper shifts in market structure and behavior. The acceptance of staking-enabled ETFs, especially for Solana, would embed yield structures directly into regulated equity wrappers, blurring the line between asset and yield vehicle. The accelerated ETF pipeline could usher in a new wave of capital into altcoins, shifting dominance in capital flows away from Bitcoin and Ethereum. At the same time, the unfolding tug-of-war over oversight regimes, SEC versus CFTC, could introduce uncertainty in derivatives, custody, and exchange regulation. For market participants, the implications are clear. Liquidity expectations are changing, alpha windows may narrow, and structural arbitrage, e.g., between staking yields and ETF premiums, will become a battleground.